Every so often, a company drops an earnings report that just makes Wall Street sit up and take notice. Well, that's exactly what we just saw from BlackBerry. We're going to break down their Q2 fiscal 26 results, and let me tell you, it was the classic beat and raise that investors absolutely love to see. So let's dive in and figure out what got everyone so excited. And look, you don't have to take my word for it. The market already cast its vote, and it was a big thumbs up. Right after the announcement, the stock just took off, closing up almost 9%. And get this, it was on nearly 4 times the normal trading volume. Yeah, it's safe to say the street was paying attention, and they definitely liked what they heard. So what were the numbers that sparked this rally? Well, it was a clean sweep, really. First up, revenue came in at over $129 million, which was a solid beat over what analysts were expecting. But, the real story here, the thing that gets investors excited, was on the bottom line. Non-GAAP EPS, that's the adjusted number, came in at 4 cents when the street was only looking for a penny. They just blew that away. And maybe even more impressive, they posted a positive GAAP EPS. That's the official by-the-books number, a positive 2 cents. That is a huge deal. And you could really hear the confidence in CEO John Giamatti's voice on the call. He hit all the high notes, right? He talked about being profitable on a GAAP basis for the second quarter in a row, a massive Rule of 40 quarter for their QNX division. We'll get to what that means in a sec. And that Secure Comes just plain exceeded expectations. This really sets the scene perfectly for us to dig into the details segment by segment. All right, first up, let's talk about QNX. This is BlackBerry's software division for the auto industry and other embedded systems. And honestly, this is the growth engine of the entire company right now. Its performance this quarter, absolutely stellar. So let's look at the numbers and see what's going on under the hood. Okay, so check this out. QNX brought in $63.1 million in revenue. That's a massive 15% jump compared to the same time last year. This is exactly the kind of top-line growth investors have been hoping for. It really feels like that whole long-term story about software-defined vehicles with BlackBerry at the core. Yeah, it's finally starting to hit its stride. Now, here's something really cool for the software nerds out there. QNX absolutely crushed a key benchmark called the Rule of 40. Basically, for a healthy software company, your revenue growth rate plus your profit margin should be over 40. While QNX had 15% growth and a huge 32% EBITDA margin. You do the math, that's 47. That is a sign of a really high-quality business that's not just growing, but growing profitably. And listen, this isn't some one-time lucky break. This is happening because of some seriously good execution. They locked in a huge design win in China for their advanced driver assistance systems. We're talking mid-8 figures. They also just launched their next-gen operating system for safety, and it's already playing nice with NVIDIA's monster DRIVE Thor platform. Plus, they're deepening their partnerships with the big dogs like BMW and Qualcomm. They are firing on all cylinders. Okay, so let's shift gears now and talk about the other side of the house, secure communications. If QNX is the flashy growth story, this division is all about creating a stable, profitable foundation. And you know what? This quarter really showed that their hard work is paying off. It's becoming a truly resilient core for the business. Now, this is super important, so you gotta look past the headline number for a second. At first glance, you see revenue was down 10%. Kind of scary, right? But management pointed out this was because they were up against a really tough comparison from last year when there was a big device refresh. The real story, the one that tells you about the health of the business, is in the subscription metrics. And guess what? They're getting better. Annual recurring revenue actually grew, and their dollar-based net retention, which is just a fancy way of saying, are they keeping their customers and getting them to spend more? It improved to 93%. That means churn is slowing down, which is exactly what you want to see. So how are they pulling this off? Well, it's all part of a very deliberate plan. They've been laser-focused on keeping the customers they have, and they're landing huge renewals with names like the U.S. State Department and even Rolls-Royce. At the same time, they're not just standing still. They're trying out new business models, like a pilot program with the German government, and getting critical certifications that basically unlock brand new markets for them. Okay, so whenever you see a big beat on earnings, the very next question on everyone's mind is, yeah, but what about the future? What's the guidance look like? And folks, this is where BlackBerry really put an exclamation point on the quarter. They took their previously kind of cautious outlook and just threw it out the window in favor of a much more confident upgrade. Just look at this. It shows you exactly how much more confident they are now. They raised their full-year guidance pretty much everywhere you look. Revenue? Up. Adjusted EBITDA? up. And the big one, non-GAAP EPS guidance got a huge bump, climbing 4 cents to 13 cents. That is the raise part of the beat and raise story we were talking about.
And this might be the most important number of all, especially for the long-term health of the company. They also jacked up their forecasts for operating cash flow for the whole year. We're talking 35 to 40 million bucks. After all the money they've spent on investment and restructuring, this is a clear sign that the company is getting back to what matters most, generating cold, hard cash.
All right, we've seen the beat, we've seen the raise. Now it's time to put it all together. What does this mean going forward? It's time for our official call on BlackBerry. So this brings us to the million-dollar question, doesn't it? After a pop like we saw, what's the move from here? The story is clearly getting better, but has the stock already run too far? Or is this just the beginning? As we see it, there are a few key things that could keep pushing the stock higher. First, management basically told us they have a strong pipeline of new deals for QNX coming in the second half of the year. Second, you've got this bigger trend of companies spending more and more on cybersecurity, which helps the other side of the business. The whole thesis really boils down to this. Can they keep Secure Comm stable? And, most importantly, can they keep crushing that rule of 40 with QNX? If they can, this story has legs. So, with all that said, we're making a call. It's an upgrade. Looking at the fantastic execution in Q2, that confident new guidance, and what looks like a clear runway to profitable growth driven by QNX, we are officially rating BlackBerry as outperform. We really think the company has turned a critical corner, and we expect the stock to do better than the overall market from here on out. And of course, we have to end with this. And it's super important. This is not financial advice. This explainer is just for informational and educational purposes. So please make sure you do your own homework before you make any investment decisions, all right?